Ethereum is suffering because of this chart. This shows how much money is flowing in and out of the system. The stablecoin market cap relative to the US money supply. And since October of last year, there is no new net inflows. And that has a very strong effect on the Ethereum price. No inflows into the system means that risk on assets have a hard time surviving. Ethereum's story is built around decentralized finance. And decentralized finance is mainly different forms of leverage. We stake tokens over here, then we make them liquid and we restake them again. We deposit them there, then we borrow against them. We've got collateral, and that collateral then gets used to deploy the capital again. When markets don't expand anymore, then assets with leverage tend to suffer. And the big question is, are we maybe even seeing a contraction of the stablecoin market soon? In other words, more people withdrawing from crypto, moving their funds into bank accounts, than people depositing into the space. A decline in stablecoin market cap would very likely accelerate Ethereum's decline. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and it is mainly through active trading of cryptocurrencies. My track record is in the link down below. Over the last 2 years, I started to publish my trades in real time. We achieved 47% APY. We are currently with the open positions at an all-time high. The open positions are available to the premium members of this channel, and the closed positions can all be seen here on the public channel as well. I don't see many people that are willing to be that transparent with their trading. Maybe because they are not long-term winning traders, or maybe because they just don't want to show what they're actually doing. I'm showing this at the beginning of most videos, so you know that transparency is very important for me. Now have a look at this. What we see here in green, that's the altcoin market cap. So the altcoins that are not in the top 10, that's called others. What we see in blue, that's a market cap of Ethereum. We normalize this to a starting point of 0, and then we check how does the percent return develop over time. We can see that both assets, Ethereum and the altcoin market, they're highly correlated. They tend to move in the same direction at the same time. Sometimes the altcoins are comparatively more expensive. Sometimes Ethereum is comparatively more expensive. We can also look at the ratio of the two. That's then this chart. This starts in 2018. And it's pretty clear to me that this ratio tends to trade around an equilibrium. The average is this dotted line over here. And Ethereum currently seems to be, compared to the altcoins, rather on the cheaper side. If we were to return to the equilibrium, Ethereum would outperform by 27%. The absolute maximum outperformance, if history is any indication, is at around 95, potentially even a bit over 100%. So this tells us that even though Ethereum and altcoins tend to move in the same direction, that the altcoins are likely going to slightly underperform Ethereum in the not so distant future. Or in other words, Ethereum might be outperforming slightly. Now, outperformance can mean that it just loses less. It can also mean that it stays stable while the other asset goes down. This is just about opportunity cost, as in deciding where to put more allocation towards. So if relative to the altcoins looks rather cheap, that doesn't mean that it has to appreciate tomorrow. We could very much fall down first and then recover. The question is not about timing the market perfectly. It's about buying the asset that has a more promising future. Now this is ETH relative to the altcoins. Here is Bitcoin relative to the altcoins. And over the last 4.5 years, Bitcoin tended to outperform the altcoins. It recently had a bit of a correction after Michael Saylor sold some BTC, but now it's stabilizing again. And I think there is no reason to infer from the recent correction that the long-term trend is broken. The reason why Bitcoin is doing better than most altcoins is that traditional finance can access this much easier, right? We've got the purchases through the ETFs, we've got the purchases through the treasury companies. Here is how many Bitcoin are held by Strategy, so formerly known as MicroStrategy. It's close to 850,000. The total liquid supply of BTC is at roughly 20 million. So almost 5% of the entire supply of Bitcoin is held by Michael Saylor's company. It looks like nowadays we do need an ETF and we do need treasury companies for assets to outperform. For example, the Hype token, so the token by Hyperliquid, that's got an ETF now, that sees inflows, and so Hype tends to also outperform. It's one of the very few altcoins that's actually doing better compared to Bitcoin long term. Now, what could potentially break that trend for Bitcoin relative to the altcoins? The risk is, again, within MicroStrategy. This is the variable debt instrument by the company. It's STRC, and it has come down massively from its $100 target price. Now, I've made a dedicated video for the premium members on STRC, what might be the driver of the current DPEG and whether or not we are likely going to go back to $100. There's definitely more risk building up. And yes, the decision of Michael Saylor to get into Bitcoin in the first place was, of course, very beneficial for him. Here is MicroStrategy relative to the NASDAQ 100. So how did strategy perform relative to other tech stocks? Since he started buying Bitcoin, he tended to outperform the NASDAQ. But of course, can he continue to outperform? Because his MNAV is now at only 1.13. In other words, there's only a 13% premium for the valuation of his company relative to its Bitcoin holdings. If that falls below 1, then he won't even be able to buy Bitcoin issuing common stock anymore. So right now he can't buy it with debt, and there's a scenario he won't be able to buy it with equity either. This is MicroStrategy relative to the Bitcoin price. Since he started to buy Bitcoin, he did outperform the Bitcoin price, but if we were to fall below this line over here, then the MNAV gets negative, and then there's no more purchases by MicroStrategy. And that, of course, will change the dynamics for Bitcoin as well. Then the big question is, can it still outperform the altcoin? This bounce here in relative performance of Bitcoin to the altcoins is subject to MicroStrategy stock staying somewhat stable and not crashing tomorrow. And we have seen there has been quite a bit of volatility recently. In the last 1.5 months, MicroStrategy went down very sharply. There are definitely cracks forming. Otherwise, the variable debt instrument wouldn't look the way it is. Now, this is a video mainly about Ethereum, but everything is interconnected. Here we see the in and outflows from the Ethereum ETF. We tend to rather see outflows, but their magnitude isn't really that much of a problem. The magnitude for the Bitcoin ETF outflows, however, is much more of an issue. So some people on Wall Street are already anticipating a crisis in Bitcoin and they are withdrawing. The ETF is not a one-way street. People can buy Bitcoin via those ETFs, but they can also sell it. And recently, since October of last year, actually, we tended to rather see outflows. Now, we already talked about October of last year, right? That's also when Ethereum tended to go down. And that's also when the stablecoin market cap relative to the US money supply stopped expanding. Over the very long term, Ethereum tends to trade in a range versus Bitcoin. It outperformed very well in anticipation of the merge. So that is when Ethereum moved from proof of work to proof of stake. That merge happened over here. So it was a sell the news event. Ethereum subsequently underperformed Bitcoin. The rally that we saw recently, so last year, that was when Tom Lee of Bitmine started buying Ethereum. So it was not just Tom Lee, it was various Ethereum reserve companies that bought, but those purchases have also slowed down since roughly September of last year. September, October last year, that's always the point in time where many metrics turned around. And that's also when Ethereum started to underperform Bitcoin again. And the current trend is very clear. If the current momentum was just to continue and things were to develop as they did in the last months, ETH could potentially underperform Bitcoin by another 30% before it hits a stable support. I think that trends usually turn around when there's a real reason for a contrarian bet, either because valuations are very, very low or because we saw a very quick crash because of an external event. If we just have a slow bleed, when prices just slowly tend to underperform, then there's no reason for a contrarian bet. Then that tends to continue. So we are currently betting on falling prices of Ethereum. There's an Ethereum trend following strategy that launched at the beginning of the year on the 19th of January. And while Ethereum lost quite a bit, 45%, we are up 25%. So measured in ETH, the stack has more than doubled. And of course, annualized, that's a very high number. But again, we just started at the beginning of the year. But if you're interested in following us along, that trend follower is available to the premium members of this channel. Feel free to check it out. There's also a 7-day money back guarantee. So in case you don't like premium, just email me over here. I'll refund you. No questions asked. Again, feel free to check out all the details on the different pages and be reminded there's really no risk in trying it out. There's a money back guarantee. If it's your first time here, feel free to subscribe. I publish this regularly. Like would be very much appreciated as well. Helps the channel grow. See you next time here on YouTube or see you on premium. Link to that pops up on the screen as well. See you next time. Cheers.